Welcome back to the Wenke podcast, and today I got on my cousin, the one and only, the most famous of the Ambrosios, the Travis Ambrosio. So thanks for coming on, man. Appreciate it.
Thank you for having me. What a honor it is to be here, and I appreciate that warm introduction. The most important, best Ambrosio. That's quite a title.
Yep, for sure, for sure. Well,
I'll
we
make
have
sure
the
my
most.
brother and my sister hear that.
Yeah, we'll let them know. I'm sure they'll be so desperate to listen to this when it comes out too. But I mean, we do have the most interesting conversations. So I mean, that kind of puts you in the top slot, right? Something
Definitely
like
top three.
top three. But
We do have good conversations.
yeah.
We do have good conversations. That's where we're like-minded like that.
Hence part of the reason I wanted to have you on, because I thought it would be fun. We have so many different random conversations about politics, philosophy, religion, in our family gatherings. So I figured, to my millions of fans, might as well let them have a piece of the pie as well. So
Yeah, give them a little sneak peek of our conversations. I agree.
yep. So I think we want to cover a couple different things, but first off, like we were discussing, I want to touch on this conversation piece within the context of politics today. So right now we live in a time where discourse is it is full of
Course.
tension. What's up?
Discourse is course. Sorry, interrupted you.
Yeah, is course. Yeah, that's a good way to put it. It's heightened. It's political. Everything's political. People can't seem to have conversations these days. The university, which used to be the cornerstone of free speech, is now a mess of censorship, in my opinion, and we could get into that, but at least it's degenerated. We could agree on that. So we're in this time where free speech is under threat from available metrics and is degenerating, which is why I appreciate our ability to have a conversation, because we do disagree on quite a bit. Although I would imagine that we agree on far more than we disagree on. You just tend to focus on the disagreements. And this is the other thing with discourse today, is like you can get an inflated view of how polarized things are simply because people focus on differences more than what they agree on. It's this kind of, it also happens to be the case like with the news and focusing on negative stuff. It's like you tend to focus on the negative. You tend to focus on what you disagree on. You don't always talk about what you agree on or the positives going on. So it can kind of give a inflated view of what's actually going on. But one more thing here, like to kind of outline my view on like a leftist versus a liberal. I think this is important here. Is like when someone's like far on the left, or I would even put them in the neo-progressive camp, we can't even have a conversation. And my concern is that there's a larger and larger percentage of the left, and the right for that matter, that have moved into this category of won't even have the conversation. So
Yeah.
versus someone that I would say is more classically liberally minded, and I would put you in that camp, we can still have that conversation. We might disagree on tax policy, but you want to talk about that disagreement. You don't want to say that I'm evil because I disagree with you.
Mm-hmm.
So I think that that's critical, and I think that makes our conversations much more fruitful because we
I agree.
actually have them. So I want to put that out there. Any comments there?
Yeah, I think some of the best conversations you can have are with people that you disagree with.
Yeah.
If you just talk to someone who only agrees with you, then I don't know. I think you're missing out on a good conversation, perhaps. You can disagree with someone and still be agreeable, and that's really hard to do. Including for myself, for a while, when I first started getting into politics and learning about these social issues, I would then sometimes have discussions which a lot of times devolved into arguments with my friends or peers or relatives, and I would get defensive. I get aggressive, and it turns into a battle, and it's easy to have the conversation slip away like that. So yeah, it's important when you're. Just the other day, I was in driving my friend back from volleyball tournament, and she is a pro-life someone who believes in pro-life, the sanctity of life. She's a traditional conservative, and she talked about how abortion is her hot button issue. And she, you know, I am pro-choice. You know, that's how I identify. But you know, when she said she was pro-life, my immediate reaction wasn't wanting to fight or challenge her on it. It was more, oh, tell me about that. You know, I want to hear why you feel that way, and you know, what does that mean for your views of the world? You know, it can. I think when you have conversations with people that aren't like-minded, it can allow you to learn more about the world and ultimately more about yourself too, and why it is you believe certain things. So, yeah, it's very important. And it's sad that, as you mentioned, institutions in college, especially, I did notice it at Michigan State where I went. It seems like it is becoming more and more of a issue and a contagion where people are afraid to be hurt. Words harm you.
Yeah.
And that's unfortunate because they don't.
It's true. It's true.
For the most part.
Yeah. You know, we can add a caveat there, I suppose. Yeah. Of course, but yeah, from overall, the point is true. So, yeah, no, I think that's all very relevant here. I think while we're on this topic, someone that like I admire on the left is like Bill Maher, and I think I've mentioned this to you before, but like he's definitely liberal. I mean, from all available metrics. But
he's traditionally liberal.
Yeah, traditionally liberal, classically
neoliberal. Yeah.
Whatever you call that. Go there. Classical liberal is the kind of the term I use, but
okay.
Terms, whatever. But he'll have on all sorts of people, and some of my favorite conversations are when he has on like Ben Shapiro or some other people, and I mean,
I love that.
They have a great conversation.
Yeah,
so they're so entertaining. But it's more fun because they disagree. Like there's no fun if it's just all agreement.
Right. Oh my gosh. So, I want a little bit. I want to debate. I want people challenging each other's points. You know, I want to. That makes it more. I don't know. Real, better.
Oh yeah. So, and on that note too, like you would, in an ideal world, you would craft the strongest version of your argument that you could. Right. So you do your research. You do your data digging, etc. You'd craft the strongest version that you could. Then you'd find someone else that's equally looking to seek for the truth in whatever topic that you're on. And then you'd give them as much credence and as much the benefit of the doubt as you can and allow them to craft the best version of their argument against yours. Because that's the only true way that you're going to find the truth is through that tension. It's through that that intellectual battle. If it's a weak version of an argument versus a weak version, you're not ever going to get at the truth. So you actually, this is what I love about like when I listen to Sam Harris and Jordan Peterson debate, is that's what they do. They try to give as much credit or to the other person's argument. You know, give the devil his dues. One of the phrases, but I really like that format. So if you have any thoughts there, but
yeah. It can be hard, as I said, to do that, but that is ultimately how you learn. And as this podcast, I think, tries to orient itself and market itself, it's all about finding the truth. And I know that's absolutely how you describe yourself. You're committed to figuring out the truth. And that is at times a radical endeavor, because you have to open up yourself to views that perhaps you have a distaste towards or a inclination against. Perhaps you have to listen to someone else who has an ideological leaning that goes against your own. And that is a humbling and challenging experience. I listen to Ben Shapiro almost every day now, even to my girlfriend.
Yeah, I got you on that. Let's go.
Nathan did let the record show. Nathan did get me on Ben Shapiro. I originally thought Ben Shapiro was a bigoted, homophobic piece of shit.
Keep them coming.
You know, and to some extent I do still think that, but I enjoy listening to Ben Shapiro, and it's because it gives me that conservative take that conservative angle that I wouldn't otherwise get. And if I want to be someone like Nathan or someone who listens to this podcast, who is the truth is animating their intellectual endeavors, finding the truth, then I need to listen to Ben Shapiro, even if it can be challenging and frustrating to hear him. And he's got an annoying voice too. That's what my girlfriend says. That's one of the reasons why my girlfriend Haley does not like Ben Shapiro, because he has an annoying voice. But I persevere and I put up with it. So yes, it is important to listen to others and give, what did you say? What was the quote? Give the other person, the devil, what was it?
Devil is dues.
The devil is dues.
Yeah.
Yes, that would be my biggest piece of advice for anyone who's listening, is to listen to the other side that you disagree with.
Boom. I think Prof G is my version of Ben Shapiro.
At least that's great.
Context.
Yep.
Yeah, I really like him.
You still listening to him?
Yeah, not a ton, but like every once in a while, I follow him on most things, so I'll come across his stuff quite often, and he's some very, very interesting.
Prof G, yeah, I would say he's much so like Ben Shapiro. He's more in just the markets and understanding kind of what's going on in the world of business, but he also does take on social issues. And so for the audience out there, if you're interested in Ben Shapiro and you like Ben Shapiro, also give Prof G. He also goes by the Dog. I think he's the Dog is his nickname. Scott Galloway is his actual name. Yep. But I recommend giving him a follow on Spotify.
Mm-hmm. Yeah, no, he's pretty solid. But speaking of markets, that was kind of at least one of the reasons we wanted a quick chat here, to see what's going on there. Eventually, I want to get to crypto, but before we do that,
let's talk about traditional finance.
Okay.
Oh, is that where you were going? Was that where you were going? I don't know. I thought that was where you were going.
Well, I mean, basically, yeah. I was gonna, just the way you said it was pretty funny. Traditional finance.
TradFi. That's the crypto jargon for what crypto enthusiasts would call traditional finance is TradFi or LegFi, legacy finance.
Really? So, I didn't know they had terms for that.
Oh, they got terms for everything. They got a lot of terms for a lot of different things. It's pretty dumb. But
fair enough.
Sorry, I interrupted you.
Oh, you're good.
I'll shut up.
No, the point is for you to talk, so you're good. Okay, so I mean, we could start in a million places. I think a couple things would be useful. In 1971, I believe, and you could fact check me on this, Richard Nixon took the United States off. What's up?
Oh, I'm just captivated. Yeah. I'm excited.
Okay. Took us off the gold standard, and you're aware of this, but for the audience, I think this is important to outline. What that means is, it means a lot of things. It has massive ramifications for money, but previously, the United States had a system where paper money was tied to gold that sat in, a number of different places, but you could these were called notes, actually. You could actually go take your note, your paper note, and go get gold for that note, if you so desired to do so. And what that meant is the money supply was relatively static. It couldn't really expand and it couldn't really contract in the same way. What happened when we went off the gold standard was the government suddenly has the ability to print money and create inflation. And the ramifications of inflation are numerous, but one of which is that as inflation goes up over time, the buying power of your money goes down. Basically, there's one way that people have described it to me is there's too much money chasing too few goods. So, I mean, at the end of the day, it all comes back to supply and demand. So you artificially increase the number of dollars in circulation, and the value of said dollars goes down. And it's not quite that simple, but that's the overarching principle here. So
yeah, and just to quickly interject, it makes intuitive sense. If a Corvette costs $100 and there was originally a $1 in circulation, obviously that's a horrible. Let's say the Corvette costs $10,000 and there was $100 in circulation. Excuse me, the Corvette costs $100 and there's $10,000 in circulation. If you then increase the money supply, more people, there's more dollars out there, more people that can afford that $100 Corvette. So the Corvette has to raise the price of the Corvette. Mm-hmm. There's too many dollars chasing too few goods, as you said. That's how I intuitively think about it.
Exactly. No, it makes intuitive sense. So regardless, it's something that we deal with. Now, you might ask a question, why would we want a fiat money system? And there are some interesting arguments about it in terms of at least the initial reason that the Federal Reserve existed was to help the economy in terms of interest rates and in terms of money supply in times where, let's say, COVID happened, or you had an issue, you had a scenario where having more money or lower interest rates or whatever combination of said things made more sense. Now, what's happened is that the government has abused that power to the point where pensions, saving money, the value of essentially being frugal and saving your money has gone significantly down. Because if you simply save money, that's going to decrease over time. So you end up in a morally hazardous situation where inflation is actually benefiting the government because it's effectively just a tax. That's really all it is at its essence. And inflation, the phrase goes, inflation eats debt. Because if you buy something in the past for X amount of money and that value of that money over time goes down, then 10 years in the future, your debt is smaller. That's the basic idea here. And who's the biggest debtor? Well, the U.S. government. So we've entered into a very morally hazardous situation, and I think that has spawned crypto. That would be my argument there. Now, I know I just hit on a bunch of different things, so I want to give you a chance to comment on that. What do you think about the inflation analysis there? Any points you want to add?
Yeah, I think I would agree with pretty much everything you said. For the last 3 decades, we've been living in an environment where a macro environment where interest rates are at, almost 0%, below 2%, and inflation was at 2%. And that was, people have been saying the last 2 decades have been easy money. The stock market's been going right up, and it's minimal, low, stable inflation, and a strong stock market. And so over the last 2 years, pandemic, emergency spending, deficits now even ballooned more. Yes, there's an argument that we've overspent, perhaps by way more than was necessary. We put unnecessary. We should have pulled the what did the central bankers say? We should have removed the punch bowl from the party before it got going, or before it really started heating up. So now we should also point out there's a myriad of different reasons why inflation is high now. It's not just, you could argue it's not just because of printing money. There was a war, there is still a war raging in, on the border of the EU, Eastern Europe. That has led to, skyrocketing energy prices, supply constraints, supply chain issues. China had zero COVID, and so they weren't letting they closed their borders, which made it harder for goods to be shipped out of there. So there's a few different reasons, but yes, I would agree. Inflation is bad. It's a bad thing, and this is the first time, though, in a long time where we've had a environment where inflation's at now 5%, 6%, something like that. I think you look at core inflation, core inflation's higher than overall inflation, but it's much higher than usual, and that definitely poses a challenge, and it's not good, as you said. That's my take.
Yeah, I hear you. I mean, we could, you could spend hours, and people do, debating the pros and cons of the different quantitative easing policies. I'm not here to get in the weeds on that.
This isn't a discussion of Keynesian economics.
Not at the moment. We'll see. We'll maybe just bring in the Austrian school or some other school of economics. But
there's a really good book I read, Bitcoin Standard, if you're interested in Austrian economics, and it's a rebuttal of Keynesian economics. It's all about Austrian economics. It talks about Bitcoin a lot. I mean, the whole book is about Bitcoin, but that would
context of
it
Keynesian.
Says the gold. Yeah, it would say the gold standard was back when we were on the gold standard. That was when the U.S. was most vibrant economy, most functioning, well functioning. The moment we severed that link between the U.S. dollar and gold was when it gave governments free reign over the printing press and essentially marked the end of a stable currency. So
Yeah, no, that sounds directly up my alley. Who's the author? Do you
I forget
remember?
the guy's name. It's a weird, really weird name. Just look up the Bitcoin Standard. You'll find it. It's one of the
Okay,
it was one of the best selling books. It's a very well known book. So for the
cool,
audience out there
cool,
too,
cool.
for the thousands of listeners, that's
Millions.
my. Oh, is it millions now? Wow.
Oh yeah.
I'm sure it's because I'm on. They saw that Travis Ambrosio was coming on the podcast, and
Yeah, they got pretty hype.
that really got that really boosted your numbers.
Yes, indeed. So, yeah, no, that's a good. Yeah. Anyway, I want to avoid that rabbit hole.
Yeah,
But
and the name of time too, because I'm not sure how much
yeah,
time we got left here. But
yeah. So, okay, so we have the scenario where inflation's running rampant. I mean, which you can argue it's not, but at least from a historical perspective, we're not doing great at the moment. In general, that's a net negative. Okay, how do you solve this problem? Well, I don't know if. I guess that brings in the crypto discussion because crypto hypothetically is an answer to fiat money. And I'm hoping that, and I can chime in here too, but I'm curious if you could kind of describe what are the essential characteristics of, say, Bitcoin that makes it separate from fiat money. What are we talking about here? Bitcoin as a subject is extremely confusing, in my opinion, and I've looked into it extensively. Like, but what are the essential characteristics of it that distinguishes it from fiat money?
yes, great question. Bitcoin specifically, just to
Sure, I mean the idea of crypto as such is kind of within that
yeah,
category. I
okay.
know Bitcoin's a little different, then you get into the weird other coins and whatnot, but
I would say that the central, like the main ethos behind crypto and especially Bitcoin is that the there should be no central entity, i.e., a government, that has sovereignty or control over the money supply, which is kind of crazy as I'm saying. It's such a crazy idea, but that's really what it's all about. Is that money should not be left into the hands of a corruptible, um, um, politically incentivized elite. When you rest control of something as important as money in the hands of a few different people, bad things can happen. As we've been talking about with inflation, that's one example. You can say Biden and the Federal Reserve have been printing too much money. That wouldn't happen, according to Bitcoin and crypto proponents and evangelists. Is that wouldn't happen with the Bitcoin standard? That wouldn't happen with crypto. Crypto is decentralized. It's distributed. It's not centralized in one entity like the Federal Reserve. Um, Bitcoin is trustless. It's immutable, inviolable code. You know, it the Federal Reserve makes decisions on if they want to print money or not. It's not like it's based off of what they think, where they think inflation is heading. It's kind of rough estimates. You know, it's also based on, it's a little bit capricious. You know, it depends if the president might want to intervene and say, hey, I want you to print money. They're not supposed to do that, but it's corruptible. It's human beings. That's the big thing. It's people. With Bitcoin or cryptocurrencies in general, they call it law. They describe it as law is code. Code is law. Code defines our monetary policy, not human beings. And there's a lot of appeal in that. There's a lot of, you can see where that's at least interesting. It's an interesting idea. And so the idea, you know, that's like I would say the big distinguishing differences between fiat currencies like the U.S. dollar and Bitcoin is one is monitored and controlled by potentially corruptible people. Another one is purely code.
yep. Yeah, I would agree. And that decentralized characteristic kind of covers a lot of the. It's kind of like the umbrella point here that then has multiple other, what would you say, outlets because of it. For instance, like you can have your own personal wallet that only you can access. It's not like you have a bank account where you have to go to your bank to get money. If you have the keys to your wallet, you truly have access to that and no one
Right.
else does. So there's
Right.
a security element here And correct me
Although
if oh,
I
go.
would just, and I love that. It's very true because the whole underlying overarching idea behind that, ethos behind that, is that, hey, I don't want to trust a bank. I don't want to trust someone who's, well, I don't know what they're doing with my money, but they're not keeping all my money in the vault. I mean, quick little lesson on banking: they don't keep all your money at the bank. It's if there's $100 deposited at a bank, that bank only has $10 in equity at the bank. So if enough people for $12 worth of this $100 in deposits at the bank came to withdraw their money, and there's only $10 in equity or actual money at the bank, it'd be insolvent, or be liquid, I should say. So that's the idea behind it: is, oh, I don't want to trust a bank. I don't want to trust a bank. I can't trust this random. I don't know what they're doing with my money. So yeah, you have your own personal wallet. Now there is also an issue with your own personal wallet, that you can lose your key, and if you lose your key, it's all gone. There's a famous story of a guy who lost his key, and he's been searching through a massive garbage dump for the last decade trying to find his
Yep.
freaking, the physical hard drive. He hasn't found it. Millions of dollars worth on there. Also, there's this really cool thing that you can do to actually hack someone's Bitcoin or their wallet. It's this really cool thing. It's called a crowbar. You take a crowbar and you go to their house and you say, hey, give me your freaking password, your private key. I'm going to kill you with this crowbar. So there, it's obviously kind of a joke, but it's true. I mean, it's this idea that it's because it's on your own cold, hot wallet or whatever, it's safe. Okay. But yes.
Certainly. Yeah.
Sorry, I'm done.
Oh,
Back
oh,
to
you're
you.
good. No, keep going, keep going. Certainly, yeah, I guess one of probably the themes here is going to be that a lot of the concepts are great, the ideas are great, the goals are great. Now, does it work, or can it work? That remains to be seen. So, for instance, that's a perfect example of, like, well, it's a great idea, but there's also crowbars. So, like, in reality, is this going to be something that truly can replace the dollar? And I was listening to a podcast between Peter Schiff and Jordan Peterson today, which it's actually from, like, I think a year ago, 2 years ago, something like that. But they touch on all of this, and Peter, Peter.
I know Peter.
Yeah, gold. Some say gold. So Peter's kind of he's probably the biggest bear on crypto.
Oh yeah.
Yeah. Oh yeah. I'd say probably the most. I'd say the most famous.
Most vocal, at least.
Yeah. Yeah. So he hates it, which is so. But hey, I'm listening to someone that hates it, and I mean, he has some really good points. Some really good points about crypto. They brought up a fascinating idea, which I just want to throw at you. They were talking about, like, what if you could have a crypto that was backed by gold? That would be kind of like, that would in some sense solve the problems of, because one of the reasons that fiat money came around was, like, to make it far easier to trade with, so as something else. So crypto, it's so convenient because you can just, send it to anyone hypothetically.
And gold, the blockchain. You can't.
But yeah, so
gold doesn't have that. Yeah.
Yeah, but if you had crypto pegged, because the other thing with crypto is, like, hypothetically, the whole stability factor that we've been hoping would come around hasn't, because it's so speculative that it's so at the whims of, the demand of the public. So it doesn't have that stability aspect. You could hypothetically solve that with it being backed by crypto and being more fixed.
It'd be a stable coin at that point. It'd be gold as a stable coin, which I believe already exists. I wouldn't be surprised, at least. There's so many stable coins out there. But yes, I get your point. That's an interesting idea.
Yeah, people have tried. People are trying to do this. It's tricky because you have to get mass adoption and all sorts of things. But it's a fascinating idea. But back on that, I want to touch back on your bank. It's called a bank run topic, where
let's do it.
You have a number of people running the bank, or trying to pull their money out all at once. And of course, as you pointed out, most people don't know this, the bank doesn't have your money. They might have 10% of it, if that, but they're investing your money to make a return. That's what they do. So when you have a bunch of people try to go get their money out at once, they don't have enough liquidity to meet that. And that is part of the story of what happened with FTX and what happened with Silicon Valley Bank. What was that, a couple months ago now?
Yeah, about a couple months ago. With SVB was more recent than
Then FD,
FTX, but
yeah,
yeah,
but it's kind of within the same, it's within the same general category here. Um,
basic
do you
the
want a
basic
quick touch on
phenomenon of
like
the run.
FTX and
Yes.
like
Yeah.
yeah,
FTX real quickly. Yeah. So
mm-hmm.
FTX is by far worse than a bank. I mean, it's a bank without actually having FDIC insurance, which makes it not a bank in my mind.
Yeah,
Um, FTX, excuse me, basically was okay. This is gonna be fun. Bear with me here. This is one of my first times trying to explain what happened to FTX.
you're good.
But FTX essentially functioned as not just an exchange, but they functioned as a brokerage, a clearinghouse, and a um, brokerage, clearinghouse, exchange, and a market maker. Now, most people are probably going, I don't give a shit. What does that mean? And the answer to that is that that doesn't exist in traditional finance. That's not a thing. In traditional finance, we have this really weird thing called regulation. Um, and so we separate these different, I'm going to call it entities, from being as one because it can pose systemic risk to the whole institution of
Moral
banking.
hazards. Yeah,
Yes, I mean literally that's what happened here. That's
yeah.
literally what happened here. Is that FTX was the biggest thing is they were an exchange, a brokerage, and a market maker. Now, for those who don't know, let me just quick difference between those three. A brokerage is like Robinhood. Who here? I bet a lot of people listening have Robinhood. You have that. That's a brokerage. Okay, Robinhood goes through an exchange. An exchange is like the New York Stock Exchange, um, the Nasdaq or whatever. Those are exchanges. So you actually don't trade as a retail trader directly on an exchange. You go through a brokerage. You go through Fidelity. You go through Robinhood. You go through Merrill Lynch. Those are your brokers. Okay, they trade on your behalf on an exchange. The third entity, the market maker, comes in a lot of times, and they will buy your orders. They'll do what's called payment for order flow. And so you as a retail trader, they like you. They want to buy you. They want to be on the other side of your trade because they know that you're an idiot. They know that you make dumb bets, and they want to be on the other side of that trade so they can profit off of your dumbass. So the brokerage gets paid money from the market maker to route your trades as a retail trader from directly through the brokerage to the market maker. And then the market maker goes and has fun on the exchange. So basically those four entities kind of all work together in a seamless fashion. It's all, the plumbing of the financial system. It's kind of boring beyond that point. The big point with FTX is they didn't have any of those four. Well, they had all four, but it was all one entity called FTX. Well, there was FTX Exchange, and then there was the FTX trading firm called Alameda. Alameda was the trading firm. Trading firm is the same thing as market maker in this case. Basically, what FTX did as the exchange, as the brokerage, and as the market maker, they took your buy and sell orders, whatever, routed it from as a brokerage into their exchange, and then they use all the money that you had in their account at the FTX exchange. I don't want to say all of them. I don't want to say every single retail trader had. I believe if you were in the U.S., you were you didn't have to worry about this, but any international traders did. The money, your deposits at FTX, at the FTX exchange, was used by Alameda, the market maker, for them to use that money and make speculative bets. And that's all fine and dandy when they're doing well and they're making money, but eventually they started losing money for a variety of different reasons. But a big part of it was they had these magic beans that have no actual inherent value. These cryptocurrencies that I call magic beans, but they're called Serum, and FTX also had their own equity token that, I don't know if you know about this, Binance, the CEO, started essentially short it by selling it and kind of fomented some distrust in it. And when those started losing value, that was the collateral that they had, and essentially everything imploded. That was a lot in a little bit of time, and there's probably a lot of questions you would have from that. But essentially, they had made up some tokens. Literally, they made up a token called FTX, assigned it some value, held 90% of it on their own balance sheet, pumped it into the market, started trading, somehow got a value, it just happened. It got a value, and it was worth billions of dollars, and then overnight it was worth nothing because it had no actual cash flow backing it, virtually none, and they were corrupt. It was fraudulent. They were using customer money they were using their customers' money to go. The market maker was using the customers' money to make speculative investments that didn't pay off, and they went broke.
Yep. Yeah. So that
kind of a lot.
Yeah. No, you're good. You're good. It is complicated, but I guess to kind of sum up, you end up in a scenario with little to no regulation, where you have an entity that is operating as multiple other entities that shouldn't exist as one, effectively speaking, because of the moral.
Yeah.
Okay.
Go ahead.
Because of the moral hazards associated with it.
Yes.
And then you're also dealing with a completely new variable, which is crypto. So they're quite literally using the power of crypto to say they have, in some ways, print money. I mean, it's kind of weird. It's like they kind of created a coin, and then it got inflated, effectively speaking, because it doesn't actually, and this is the other thing with crypto, is to Peter Schiff's point, it doesn't technically have inherent value. So
no,
that's where this idea of like a gold-backed crypto comes in, because you would have something with inherent value, something that is a commodity that's physical, that isn't just code. So FTX is kind of an example of where, let's say, the perfect storm of different things kind of came together, and a collapse happened. A lot of people lost a lot of money.
I would agree with that. Yeah. It almost worked. It almost worked. I mean, you think about this. They created an imaginary token called FTX that was it's called an equity token, and it was valued at billions of dollars. I mean, essentially what Sam Bankman-Fried did is he made up this brand new currency that 5 years ago, before FTX existed, had no value. And he made it up, and it ended up being worth billions of dollars at one point, and he used that value to finance all of his operations and his trading. And that's remarkable. That's remarkable. It's terrifying, but that's remarkable.
And he got some big players to buy into it too.
Oh, he did.
Yeah,
Tom Brady was one of them. I know Taylor Swift was offered an opportunity, and she, being the intelligent, bright young woman she is, said no to that. She rejected him, but a lot of people were in on it. I mean, FTX was everywhere. It's still like Los Angeles Rams have it as someone has it as their stadium, or no, it's Crypto.com. I don't know. They're everywhere. They were on the Super Bowl commercials. They were everywhere. Yeah. Which is a big part of crypto, though, is about getting these. Crypto is all about the pizzazz. It's all about getting the attention and finding. Really, they don't have any actual. Crypto doesn't have any. They don't have any need for money on their balance. They're not a bank. They're not going out making loans to a small business or going out and helping someone finance a mortgage on their house. They're not doing anything like that. Crypto doesn't do anything. All they need, if they have any cash on their balance sheet, what's the best use of that money might realistically be to go out and say, "Hey, celebrity, you're really famous. Go ahead and promote my exchange," because what else you can do with the money? They don't do anything. It's like, as you said, it's almost all these cryptocurrencies that have no underlying value. It's all about trust in it.
Exactly. I mean, hypothetically, you could imagine if the trust failed, everything would collapse. I mean, you can make that case.
That is absolutely true. Which is kind of ironic. It's kind of a paradox if you think about it, because crypto is supposed to be all about being trustless. We don't need to trust banks. We don't need to trust. What do these guys think they know about? What's the importance of cash flows and valuing a business? That doesn't matter. Banks are dumb. They're doing corrupt things with our money. We can't trust them, and so let's just use crypto. And in the end, I have a friend who had money in Celsius. Celsius was a brokerage. Effectively, it's a bank, again, as I said, though, without FDIC insurance, so it's not a bank. It's a brokerage. Yeah. And he had money in it, and he without knowing it, trusted Celsius to be good for the money, to have his money and to be using it in smart ways. And it turned out that they made some bad bets. They loaded some money to some bad hedge funds. One of them was Three Arrows Capital, which was a hedge fund that imploded because then Three Arrows Capital had a lot of money in Terra USD, which imploded. And so it's all what's ironic and paradoxical about crypto is that it's a system that's supposed to be all about being trustless ends up relying much more on trust than I feel like the traditional banking system.
Yeah, that is in some sense the ultimate irony here. Yeah, and back to the broad point that I was trying to make is there's a lot of like I get the problems they're trying to solve with fiat money. We kind of outlined those. I get the problems, corrupt incentive structure, etc. But to Peter Schiff's point, if there isn't some kind of commodity or something backing it, something tangible, something real, something physical, it doesn't seem likely that this will ever be able to truly take off like the proponents say it will. And I could be wrong about that, but I place my bets in that unless something comes around like crypto backed by gold, I don't see how it can keep going given the state of it being such it has to be fueled by trust. I don't know. Do you agree with that? Like, but I guess.
Yeah. Oh, absolutely.
Absolutely. More broadly speaking, what do you think about the future? Like, do you think that crypto is gonna continue to? I mean, we've seen a massive pullback. What, it hit like 70K at highs, Bitcoin or something like that. Now we're
about
I
70.
don't even know where we are. What, mid-20s right now?
About 30,000. About 30,000.
Yeah. What's the future look like in your opinion? I know it's quite the speculation thing.
Right. No, but it's a good question. I think you have to distinguish between two types of cryptocurrencies. Right. There's cryptocurrency, which I think there really is only one reputable. By currency, I mean like money. A cryptocurrency that functions as money, equivalent to like a US dollar, or some hybrid between US dollar and gold, that has the properties of money, a store of value, possibly can be used for transactions, money. There's three properties of money. I only got two of them. I'm missing one of them. It's okay. I'll figure it out later. Bitcoin is that. That is Bitcoin. Bitcoin's a currency. It's like money. Then you got all the other alt tokens. And alt tokens would be like Solana, Polygon, Ethereum. I would say of those, 99.99999% of them are dog shit. They're worth $0. They have no value. They'll be, in 100 years, they'll be worthless. Bitcoin is the only one that's actually interesting, and it might, just because, as we've talked about, trust and belief in the system, Bitcoin has a substantial, robust following of pretty vibrant people who really are, who believe in it. And that is ultimately what money is all about. We have to remember, money, US dollar, has nothing backing it, as we've talked about. There is no gold backing it. It's just belief in it. It's belief in the system. That's what money is. And a lot of people believe in Bitcoin, and that's powerful. Is that erroneous belief? Is that, are they being credulous? Perhaps. But at the end of the day, the nature of it is that people believe in Bitcoin. These alt tokens, the only way they'd ever have value, Solana, Ethereum has, of all the altcoins, Ethereum has the most value for good reason. They actually have some utility behind them right now. We're seeing they have to, as you've talked about, they have to find a way to connect to the real world. They have to find a way to actually contribute to society and to make the economy more they have to create. So the whole point of baking is to if you're a farmer, a bank's job is to make it so you can grow crops more. So you can grow your crops better. If you're a company, the whole point of banking is to finance and lend you money and allow you to grow. If you're someone trying to buy a house, the whole point of banking and money is to lend you money so you can buy a house. Crypto doesn't have that right now. Crypto doesn't have that. Crypto needs to find a way. If these altcoins are ever going to do anything and be anything of value, they're going to have to find a way to connect to the real financial world. And what's really interesting about crypto is that it went from the top down. if you could let me read something real quickly here, I
Go
think this
for it.
could be
Yeah.
insightful. Okay, okay. There's the real world, and people do stuff in the real world. They grow food and they build houses. Over many centuries, a financial system grew up, and as an adjunct to that real world, the financial system enabled people to do more stuff in the real world. They could build railroads, semiconductor factories, or electric cars because they could raise money from strangers to fund those activities. Banks. They could buy bigger houses because they could borrow money from banks. They could also trade out of the money call options on GameStop because that's fun. You can make memes about it. But that's an accidental feature of a financial system that mostly does serious stuff like allow people to buy houses in the real world. But by 2008 or 2020, that system looked pretty abstract. When you think about modern finance, you often think about things like those GameStop options or the systems of payment for order flow that enables their trading or synthetic collateralized debt obligations referencing other CDOs, referencing pools of mortgage-backed securities. Sounds crazy. It gets abstract. It's opaque. Finance now, the financial system seems crazy. It seems opaque. It seems like what doesn't make any sense. Where does it connect to the real world? There's a house there somewhere, though. Okay, in all this, there's a house there somewhere. In the traditional financial system, there's a house underneath all this. Those CDOs, all those mortgage-backed securities, there's a house somewhere down there. The house exists with an actual person living in a house. All the sophisticated modern finance can be traced back step by step to the real world. But the important point is that sophisticated modern finance was built up step by step from the real world. The real world came first, then finance, then the more complicated, finance stuff. So if you build a financial system that has trouble with houses, but is particularly suited to financing video games, one that lets you keep, I'm not going to read that part. The point is that traditional finance started from the real world. It started from houses. It started from a farmer who wanted to grow his crop and wanted to hedge the risk of the price going against him. It started from a company who wanted to who needed some extra capital to finance an investment in a new factory investment. That's how traditional finance started. Crypto took the opposite approach. It came up with some new tokens and these cool new novel ways of trading it in a distributed way, and it doesn't actually connect to the real world. And so to answer your question, until crypto can find a way to take this really cool technology, innovative, where it's totally against the traditional finance norms of traditional finance, where it's distributed and decentralized and all this stuff, until they can find a way to connect to the real world, it won't be worth anything.
Where was that quote from?
That's Matt Levine. Matt Levine is a commentator for Bloomberg. I am a huge fan of him. If you're interested, to the audience and to Nathan, if you're interested in money, banking, he definitely touches on crypto a lot. He did a whole special edition on Bloomberg on crypto. He talks about money and what money is, and that was from his special edition on cryptocurrencies and what it means, what its implications are for society. Recommend him.
Yeah. Well, let's end on that, shall we? No, that was a really good. That was a good prognosis, I suppose. A good way of looking at the future. So, I don't know if I had like a sophisticated argument against it, I would put it out there. But I suppose I'm still on the crypto backed by gold train. So that's my new thing. But
I wouldn't touch crypto if I was anyone. Although I have a sizable stake in Bitcoin, but yeah. I think it's all worthless.
Hey, fair enough. Who knows? We'll see. It's pretty crazy times, but yeah, thanks for coming on, Trav. I'm out of time, or otherwise we'd keep going.
Yep.
But that was pretty good. It was pretty good. Good overview.
Good conversation.
Yeah, if people are interested in crypto more and want to hear some other arguments, Peter Schiff is probably the best argument against it, in my opinion. And then there's, I don't know, do you have a couple names? I have a couple people I can think of. People that are like pro crypto.
I know there's some out there, and I can't remember the names right now, but we could put maybe in the show notes or something like that.
Sure.
You got something like that.
Sure. I know. I'm gonna kick myself for not remembering these guys' names, but Jordan Peterson had on Peter Schiff once for a podcast on finance crypto. He also has had on a number of people that are pro crypto that really think it's the next thing. So I'd listen to both because I hear good arguments from both sides. But yeah, I think that real world, tangible, what are we talking about here thing, it's difficult to escape reality. And I don't know if it's going to be able to do it. So I hear you. But thanks for coming on. It was fun, dude.
Yeah, that was fun, man. Good conversation, as always.
All right. We'll see you.
See you.